This Thursday, November 16th, Alibaba announced their Q2 2024 earnings. And after the announcement, the stock is trading down over 11%. And this large move down comes on the back of news that Alibaba would scrap the spin-off of its cloud business. So in this video, we will dive into some of Alibaba's cloud business numbers, as well as look at their overall results for the second quarter. And during the second quarter, Alibaba announced their first ever dividend payment. And lastly, with their earnings being released and the stock trading lower, I want to take a look at their forward PE ratio and where their valuation could be headed in the future. So if you enjoyed the video, drop a like down below, and if you want to see more videos like this one, make sure you hit that subscribe button. With the stock dropping below 80, it is now fallen back to levels that we haven't seen since May of this year. And the stock is getting even closer to its 52-week low of $74.58, which it achieved almost exactly a year ago. And despite the stock falling, price targets are still relatively high around the company. We can see that on CNN Business, they have a low price target of $79.39, a median of $127.50, and a high price target of $161.78. And on Zacks.com, they have a low price target of $100, an average of $138.81, and a high of $187. This represents anywhere from a 26.5% upside all the way up to 136% upside. And in terms of Alibaba's EPS and revenue numbers, they basically came in line with analyst expectations. For EPS, analysts were expecting $2.10. They reported $2.14, which was about a 2% beat. And for revenue, analysts were expecting $31.2 billion. However, they reported only $30.8 billion, which was about a 1.3% miss. And this represents revenue growth of around 9% year over year. And overall, that's a good thing to see from Alibaba because we have seen that their revenue over the last couple of years has really started to decline and is now starting to get back to growth numbers. And overall, that's going to be good for Alibaba moving forward as we want to continue to see their top line numbers increasing. And for EPS, their reported number of $2.14 is an increase of about 21% year over year. And in terms of their GAAP EPS number, they reported $1.48. And we'll dive into valuation a little bit later, but what we see is the dropping off of this very poor quarter that they had a year ago of negative $1.09 and the addition of this $1.48 quarter. And what that does to their trailing 12-month GAAP EPS number is it bumps it all the way up to $7.13, which is almost the equivalent of what we saw 2 years ago in 2021 when they announced a trailing 12-month EPS of $7.20. Even with a relatively positive earnings announcement, Alibaba's stock fell over 10% in just a couple of days, and a lot of that coming on the back of news that they would no longer be spinning off their cloud business. And in their earnings report, they had the following statement: the recent expansion of US restrictions on export of advanced computing chips has created uncertainties for the prospects of Cloud Intelligence Group. We believe that the spin-off of Cloud Intelligence Group may not achieve the intended effect of shareholder value enhancement. Accordingly, we have decided to not proceed with the full spin-off, and instead we will focus on developing a sustainable growth model for Cloud Intelligence Group under the fluid circumstances. And specifically what Alibaba is actually talking about here is about a month ago we saw the US Department of Commerce step in and block the sale of more advanced AI chips to China. And these new restrictions not only will affect Alibaba's business, but we could see them also have a material effect on companies like Nvidia, Intel, and AMD, as they will no longer be able to sell some of their chips to China. Previously, the ban was only on their highest end chip, the H100. However, those restrictions have expanded to their H800 as well as A800 chips. Personally, when it comes to Alibaba actually holding on to their cloud business, I like this decision. I think in the long term, this is going to have a bigger impact on their business and their profitability because we can see that from market share perspective, the only players above them are Amazon, Microsoft, and Google. And these three players are the biggest players in the US. However, they do not have large market share in China. And that's where Alibaba comes in. They have a large amount of market share in China. And as China starts to advance their economy and we start seeing more of their population getting into middle class and upper middle class, I think the cloud business will grow at a more rapid pace. Even with these restrictions, Alibaba has done a great job of growing their cloud business. We have seen them roll out new generative AI models, their 2.0 version of their large language model, which I'm going to call TQ, but here is the Chinese pronunciation. And this new version offers a lot of advancements for not only the gaming and finance industries, but it also involves business enhancements like the capability of code generation as well as customer support. support. And I believe these cloud businesses are gonna get to a very profitable state. We saw this with Google this quarter, where they announced that a year ago they were operating at a net loss of $440 million. However, in this quarter of 2023, they announced an operating profit of $266 million. And we are seeing something similar from Alibaba's cloud business, as they are one of only 3 business segments that is reporting a positive EBITDA. The biggest concern that I have with Alibaba's cloud business comes around their growth, or the lack thereof. We can see that revenue year over year grew only 2%, while Google's cloud business grew around 22% year over year, and Amazon's AWS grew about 12% year over year. One thing that didn't get a whole lot of attention from Alibaba's earnings announcement was the announcement that they would be offering a cash dividend for fiscal year 2023. Alibaba will be paying 12.5 cents per ordinary share, or $1 per ADS. The ex-dividend date is December 21st of 2023, which basically means you have to own shares of Alibaba on that date to receive this dividend payment. And for ordinary shareholders, the dividend won't actually hit your account until January 11th of 2024, and for ADS holders, it won't hit until January 18th. And another way that Alibaba has returned value to shareholders is by repurchasing their own shares. They repurchased around 18.6 million ADSs in the second quarter. This is approximately $1.7 billion of shares. And ultimately, when companies repurchase their own shares, what they are doing is they are buying back shares off of the market, which thus increases the earnings per share. And what that ends up doing is driving down valuation. And we can see that right now, Alibaba is sitting at a trailing PE ratio of 11.08 and a forward P ratio of 8.42. And if we add up their non-GAAP EPS numbers over the last 4 quarters, we get an EPS number of $8.83. If we take the current price of $77.65 and divide it by that $8.83, we get a trailing PE ratio of closer to 8.8. And if you prefer to look at numbers on a GAAP basis, as we mentioned earlier, Alibaba is currently sitting at $7.13 of trailing GAAP EPS. And what that comes out to when you divide the current share price by 713, you get 10.9 as their trailing 12-month PE ratio. And what we can do is we can take a look at how the price, the EPS numbers, and the PE ratio have traded over time. And if we look a couple years ago, we could see that the company was bringing in $7.20 of GAAP EPS, and at that time they were trading at a PE ratio of around 20.5, and the price was sitting just under $150. And if we back up to the same quarter in 2020, we can actually see they were bringing in even less EPS than they are now. They were trading at a PE ratio of 42.85, and the stock price was hitting very close to all-time highs of $293. Personally, I think the stock trading down over 10% over the last couple of days is really an over-exaggeration by investors. I think the company is in the best position it has been in over the last couple of years, and we're continuing to see them grow their EPS numbers and getting back to revenue growth. And overall, I like to see that from Alibaba, and that is why I own shares in this company. So with that, keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.